All right, guys, welcome back. I want to share this little video here. I've been having conversations with a contractor buddy of mine, trying to figure out whether the recession that we're in right now is going to impact home remodels. Um, we know that it is, to a degree, slowing down the housing market. We see homes on the market longer than they have been in the past, and we are seeing more inventory come onto the market. Nothing earth shattering, right? But it is, providing some relief to buyers out there in terms of being able to actually have a chance to buy a home and not be outbid by six other people who are offering 90,000 over asking price, right? We've all heard about those crazy stories, and it sounds like some buyers are getting some relief from that. So my question to my buddy was, how is this affecting the remodel business? So I was trying to figure it out in my own head here. And so what I did was I'll share a chart with you. I started to come up with, what I identify as the 6 ways to finance a home remodel. This is nothing earth shattering. You guys probably are familiar with this. You can finance a remodel of your home through a credit card, through some savings that you have, through a cash out refi, in your home, your existing home, through a loan that you can take out on your 401k, or you could do it through a HELOC, a home equity line of credit with your local bank or credit union, or you could get out a loan, a personal loan or a remodel loan, again, through your bank or through your credit union, right? So here are some different ways to do it, and I'll go through each one. My take on where we've been the last 2 years, and then where we are going forward in terms of how this might play out. So a credit card, I think the fact that credit cards have a interest rate of, I don't know, 17 to 20 plus percentage, it makes credit cards a very unlikely source for people to do a loan or borrow or pay back their home remodel, right? Especially since we've seen the price of materials and labor just skyrocket. So the fact that people have limits on their credit cards is going to be an issue for them to do that. The interest rates on credit cards is going to become an issue. And yeah, it's just the fact that a bathroom remodel that used to cost $5,000 is now probably going to cost 15 or 20 grand, right? So I just don't see credit cards as a solution for doing a home remodel. Neither in the past nor going forward. Very unlikely credit cards are going to be it. What about savings? I think in the past, over the last 2 years, it was possible because of Stimmy checks and some free money that's been handed out. I think that was a big part to purposely stimulating the economy, right? To give people free money, to give them access to some low interest rates and things like that. And so people were able to use cash that they had on hand to be able to finance remodels. But going forward, I think that's going to be a less likely scenario. And so I want to share this article here from the Ascent. Study shows average American savings account balance is $4,500, right? Which is very weak. This article was updated on May 9th of this year. And so they go into a lot of detailed stats. The Federal Reserve reports that 36% of Americans don't have enough money on hand to cover a $400 emergency. So if 36% of Americans don't have enough money on hand to cover a $400 emergency today, what chances are that they're going to be able to finance a home remodel with cash, right? Slim to none, right? Every adult should have enough money and savings to cover a minimum of 3 months of essential living expenses. Ideally, every adult should have 6 months. We know that's not the case because we saw over the last 2 years during this pandemic, the economy shuts down for a month or two, and people were freaking out because they weren't going to work. They were not allowed to go to work, and just a bunch of other scenarios. So yeah, we know that people aren't living by this metric of having a minimum of 3 months savings or 6 months savings, right? We know that's not happening. In the article, they go through some key findings here of 78% of Americans have a savings account. So that's good. A large degree have savings account. 22% have between 1,000 and 5,000 in savings. So, pretty lackluster there, pretty low savings balances. Half of Americans have 5,000 or less in savings, while 35% have 1,000 or less. So now they just start to break down this previous metric into a little more granularity, which doesn't invoke confidence in terms of people having cash in the bank to be able to do a home remodel, right? The median savings account amount is 4,500, like they had said. Nearly half of the respondents said they have an account specifically for emergencies, which is good. So half of the people, so they did a survey of 2,000 Americans, so pretty healthy survey, right? So half of them said they have an emergency account, which is good. I wonder how much is actually in that emergency account, since they can't cover a $400 emergency expense. So that's a question. 70% of respondents automate their savings deposits, which is great, which is a very efficient way to be able to save money by automating, right? Doing direct deposits from your employer directly to your savings account. But I mean, at the end of the day, the amount of savings is, again, lackluster, right? So this article just goes on with some more data. Great chart here that shows, if I was to add it up, 62% of people have less than $10,000 in the bank. 62% of the population has less than 10,000 in the bank, right? And if I extend that to 20,000, right? 73% of the people have less than $20,000 in the bank. 73% have less than 20,000 in the bank, which is concerning. And again, it goes back to, can people afford to do a home remodel if 73% of the population has less than $20,000 in the bank? That's, they're not going to fund it with cash, right? So let me jump back over to here. So that's why I say, going forward, based on those statistics, savings is going to be a very unlikely source to do a home remodel. Okay. What about a cash out refi, right? In the past couple of years, it's been very possible to do a cash out refi, right? We know that home prices have been going up and the rates have been low, right? We've seen high 2%, low 3%. And that's been good in order to pull out equity out of your home if you wanted to do a home remodel. But what's going on today, right? Let me pull up. So this is a Federal Reserve chart, 30 rate fixed mortgage rate in the US. So where are we now? We are about 5.5%, maybe 6%, somewhere in that range for a 30-year mortgage. So if you do a cash out refi, all these people out here, as far back as, I'm going to say, oh gosh, probably 2009. Since 2009, people have probably, if they were going to refinance, they probably already refinanced to be able to potentially pull cash out, right? We are now at a point where we are practically 6% to do a 30-year mortgage. So chances are unlikely that people are going to start doing cash out refinances for a home remodel. So I say, going forward, cash out refi to fund your home remodel is unlikely, right? How about a 401k loan, right? In the past couple of years, that's been very possible, right? Why has that been possible? Well, in the last 2 years, we've seen nothing but the stock market go up and up and up. People felt very rich because they were seeing their accounts grow over those last 2-3 years, right? Which is great. They're growing their nest egg for retirement. And so the last couple of years, they've felt that maybe they can get a loan out against their 401k to be able to do a home remodel. But what about now? What have we seen so far this year? The stock market has taken a dip. It's down about 20%, somewhere around there. And some of these stocks are actually down as much as 50%, if not more. So just the mental strain that comes with that when somebody opens up their statement and they see that their account balance from the beginning of this year is down 20-30%, mentally they hold on to that and they say, maybe it'll come back, right? Maybe the market will come back. Maybe my account will go back up. And so there's less of a tendency at that point for them to pull money out of their 401k because now they're feeling a little more poor because their account is lower. Okay. So this is why I say today, in the next couple of years going forward here, 401k loan, most likely, unlikely people are going to be pulling a loan against their 401k to do a home remodel. Now, what does that leave us with? Well, it leaves us with a home equity line of credit, which in the past couple of years, again, very possible to do that because rates have been low, home equities have been high, right? Very good there. I think going forward, home equity line of credits are still possible to do, right? But again, it comes back to consumer confidence and whether they feel the economy is going to be strong or whether it is weak. And I think there's enough news stories out there and folks like me and others who have been, on our channels talking about the recession that we're currently in, right? We're not thinking a recession is coming. We think we're in a recession today. And so, we look at charts like this, the Atlanta Fed puts out their forecast for GDP. And in late June, they were at, in positive territory, thinking the GDP, the productivity of this nation was going to be in positive territory. However, on June 30th, they actually lowered that expectation to -1 on June 30th. Now, the kicker is the very next day, July 1st, they took that forecast down from -1 to -2.1. Okay. And you see where their forecast has landed since, right? Still very much in negative territory here, right? So albeit still an option to pull a home equity line of credit against your home to be able to finance your home remodel is doable, and the rates are still good, 4%, somewhere around there to pull a HELOC loan, 4%, and say you have to pay that off over 10 years. I'm going to share with you a tool that I use. This is a loan amortization calculator that I use. You can go ahead, look it up on Google. It's a very useful tool. So say your loan amount is $50,000, which is not unreasonable if you're doing a kitchen remodel or something like that. So $50,000, an interest rate of 4% for a HELOC. Say you pay that over the next 10 years, right? Your monthly payment on that HELOC is going to be about $500, right? And as we just saw in this article on savings, right? The savings account balance is pretty weak in this country, right? So so being able to pay this $500, that's a pretty big nugget, I think, for a lot of people to pay out of their pocket each and every month for a $50,000 remodel of a kitchen or a basement or something, right? So I think that's, albeit a likely source people can get the money from. I do think it is, it's still possible, but not as strong as it used to be in the past. And so that leaves us with getting a personal loan or a remodel loan. In the past, that's been very possible. The economy was strong. People were, getting pay increases and bonuses for joining a new job because we couldn't find people to go to work, right? So the financial statement for individuals was very strong over the last couple of years, and able to pay get a personal loan or a remodel loan. But what about going forward? The next couple of years, I think it's still possible. I think people will, to a great degree, still retain their jobs. However, I go back to consumer confidence and whether they're going to have the confidence to pull that loan. And typically, these loans are a little more expensive than, say, a home equity line of credit. So if we go back to this tool here, this loan amortization calculator, stick with the $50,000 for, say, a kitchen remodel, and say this is 6% of an interest rate on a personal loan. Okay, this for a personal loan at your bank or credit union for 10 years. Let's see what that does. So it takes it up by about $50, right? If you get a personal loan, it takes it your monthly payment up to $555. So not saying it's not possible that they wouldn't do a personal loan. I'm just saying it's probably less probable that they do a personal loan to finance a home remodel, right? So this is just my take on it, where I see where we've been the last couple of years and where we're going. I think most people would agree credit cards, savings, cash out refi, 401k loan, those are probably off the table at this point. Whereas, we had some of those available to us in the past, and now just going forward, I think a HELOC and a personal loan probably are the most realistic choices for a home remodel loan. So anyway, just wanted to share that tidbit. Hope this is helpful to some folks in some way, whether you're looking at a home remodel or whether you're a contractor trying to figure out your business going forward, or you're some other business. This all applies to every one of us. So hopefully this helps. Have a great day, guys.